Hello everyone, welcome back to our YouTube channel. We are PGN Accounting Group. Today we're going to be talking about when to and why switch from an LLC to an S corporation. But before we get into the video, please hit the subscribe button, follow this QR code to our Instagram page where you're going to get a lot of other information, some different posts and reels with other information that we haven't talked about on this YouTube channel. And also visit us at pgnaccounting.com to get a list of our services and where you can contact us to set up a free consultation. Now getting into the topics of this video, we're going to be talking about what difference between an LLC, a sole proprietorship, and an S corporation. What is self-employment tax? We're going to be talking about understanding payroll. When does it make sense to switch from an LLC to an S corporation? Reasonable compensation, the Form 2553S election, and flow-through entities and QBI deduction, which is qualified business income deduction. So topic number one, what is the difference between an LLC, sole proprietorship, and an S corporation? Well, first, I want to bust a myth that a lot of people don't know, is that LLCs and sole proprietorships are actually taxed the exact same way. LLCs do not save taxes, but they have limited liability protection, which is what they stand for, limited liability company. They both are subject to federal, state, and self-employment taxes. However, S corporations do not pay self-employment taxes, but they offer the same limited liability protection as an LLC. In an LLC or sole proprietorship, you do not pay yourself via payroll and a W-2. However, in an S corporation, you do pay yourself via payroll and a W-2. Topic number two, what is self-employment tax? It includes the employer and employee side of Social Security tax, which is 6.2% for each side. And it also includes Medicare tax, which is 1.45% on both sides. So add all of those up together, you get 15.3%, which is the self-employment tax rate. Who is subject to self-employment tax? They are self-employed business owners, just like it says right there. It's nothing complicated. But that also includes 1099 contractors. So the difference is that no taxes are withheld when you are self-employed. This is different to an employee with a W-2 where taxes are withheld. These individuals who are self-employed are subject to federal, state income taxes and the self-employment tax. So LLCs and sole proprietors pay this self-employment tax on that net income, whereas S corporation owners do not pay self-employment tax. So let's understand payroll. S corporation owners save on this self-employment tax by issuing and paying themselves a W-2 in their own business. When an owner of an LLC or sole proprietorship pays themselves or takes money out of their business, then the business does not record that as an expense. This is called a distribution, and we're going to be talking about how to pay yourself in an LLC, a sole proprietorship, and an S corporation in a future video. So please hit the subscribe button so that you can get notification when those videos drop. When the owner of a S corporation pays themselves via payroll and a W-2, then the business takes that as an expense. The S corporation has to pay payroll taxes, and the owner has to take a reasonable compensation. This reasonable compensation is based on many factors that must be calculated, and we'll talk about that a little bit later. The owner will have to pay federal, state, self-employment taxes on their W-2 wages, but the remaining net income from the business is only subject to federal and state income taxes. So here's a little bit of an example of a self-employed business. They have gross income, $500,000. Expenses of $400,000 leaves them with $100,000 net income. They'll pay themselves a reasonable compensation via W-2 to the owner of $30,000. What you're left with is $70,000 net income. That $70,000, let's say it was subject to self-employment tax, then that it's multiplied by 15.3%, which you'll get $10.7 thousand of self-employment tax savings because you switch from an LLC to an S corporation. Now that W-2 of $30,000 to the owner, yes, you do have to pay your federal, state, and self-employment taxes, but on that $70,000, you're only paying federal and state income tax. So you are saving $10.7 thousand in just that 1 year because you switch from an LLC to an S corporation. So the savings are massive here. When does it make sense to switch from an LLC to an S corporation? When you become an S corporation, there are additional costs incurred, such as you have to file a separate business, federal, and state tax return. You must register, file, and pay federal and state payroll taxes and tax returns. And these costs vary, but the tax benefit and savings should outweigh the costs of switching and running to an S corporation. When your business reaches about $20,000 to $30,000 net income, then please consider switching to an S corporation and reach out to us to help make that switch. It doesn't matter if you're in November and now you realize, hey, I made that $20,000, $30,000 net income. I think it's too late to switch. Please do not hesitate to reach out to us at pgnaccounting.com to make that switch and save you a substantial amount of taxes this year. This threshold will yield between about $1.5 to $3,000 tax savings if you're at that $20,000 to $30,000 net income. Obviously, it's a no-brainer if you're above that. Please switch to an S corporation immediately. And like I said, these tax savings should cover the additional costs and then some, which is incurred for being an S corporation. Reasonable compensation. An S corporation owner must issue and pay themselves via W-2. The amount of that W-2 that is paid must be a reasonable compensation per the IRS code. This amount is calculated by your accountant and based on industry, geographic region, and net income of that business. We at PGN Accounting Group calculate and determine what is reasonable compensation, and we do not allow our clients to take less than 30% of net income as a W-2 because this helps for audit protection. Knock on wood, hopefully it'll never be an issue, and it hasn't been so far for our clients, but we like to be safe than sorry than cross over that line and be over aggressive than is necessary. Form 2553 S election. This is the form that must be filed with the IRS to convert from an LLC to an S corporation. This form must be filed timely, but if it's late, like I mentioned earlier, it is November, it is almost December, it is not too late. Please contact us at PGN Accounting Group if you still have an LLC, and we will file a late S election. This S election needs to have specific wording on it for the IRS to accept it. And also we need to register and file payroll taxes by the end of the year. It is not too late. Please contact us at pgnaccounting.com. We will eventually make another video on how to switch an LLC to an S corporation. Please subscribe so you do not miss any of our upcoming videos. Here's an example of the form 2553. You could find it online, just Google it, and you could go through the detail. We're not going to be going through the detail here, but I just wanted to show you what it looks like. And here, again, pages 3 and 4. Usually it's just the first 2 pages, but just want to give you guys an idea of what we are talking about here. Flow-through entities and qualified business income deduction, or QBI or 199 Cap A. These terms are interchangeable. A flow-through entity is a sole proprietorship, LLC, or an S corporation. These entities do not pay income tax at their entity level, but they flow through the business net income to the individual that pays the tax at the individual level. Flow-through entities receive a 20% QBI deduction on the flow-through business net income, subject to limitations. The example below shows why S corporations are so powerful, which we'll be going over shortly. We do recommend, highly recommend, every small business owner to consider being taxed as an S-corporation, but it's very important to speak to a tax professional. Please contact your tax professional if you already have one. If you don't, or if you're not comfortable with the services they have been providing thus far, please contact us today to set up a free consultation. No pressure on going with us, but if you just have some questions, 10-15 minute phone call, no charge to you, please contact us as soon as possible to set that up. So the example over here shows net income $70,000, just like earlier, times that 20% Q by deduction, which results in $14,000 Q by deduction. So if you have net income of $70K minus that $14K Q by deduction, then you're left with taxable income, which is what is actually taxed on. You're not taxed on the $70K even though it's net income. You're taxed on what is taxable income. So you take that $56,000 and then you go through the brackets, the federal brackets and your state brackets to figure out what federal and state income taxes you actually have to pay. This is not self-employment taxes. So again, I just wanted to let you guys know why it is so important to switch from an LLC to an S-corporation when you meet certain thresholds, and who you should talk to, whether it's your own tax professional. And if you don't have one, please contact us at pgnaccounting.com. We are more than happy to facilitate the switch from LLC to S-corp and do your payroll and make sure that you're getting those substantial tax savings in this year. Do not hesitate. It gets pretty busy with the holidays at the end of the year, so please contact us as soon as you can. And if you found this video helpful and educational, please share it, please subscribe, follow us on Instagram for more future videos about finance, about tax, entities, and all of that good stuff. So please follow us, subscribe, and we'll see you on the next video. Take care.